The trader who has a plan will always outperform the trader that doesn't have a system. If you didn't plan, then you plan to fail. In this video, I will be showing you 3 ways that I use higher time frame fair value gaps in order to catch the trades that I do. But more importantly, I will be showing you a repeatable system so you could have a clear-cut bias every time that you hop on the charts. The reason I see traders lose is because they try to anticipate every move on the lower time frame. Then they become disappointed when their analysis does not meet their expectations. Sometimes you have to let go and be okay with imperfection. No trader is perfect, but I will show you how to beat the odds and have a more clear view on the market. Higher time frame rules. I'm going to show you guys the 3 ways that I use higher time frame fair value gaps. Let's get straight into it. First things first, let's look at what time frames we're using. So we're going to have the weekly, the daily, 4 hour, 1 hour, everything that you see on screen. And I just like to favorite these on TradingView. This will allow you to have a faster reaction when you want to look at the higher time frame. Let's get straight into this. Delivery is first. So we're going to see in very key areas, we're going to have some kind of delivery. And right here is our first delivery. This is on the 1 hour time frame on NASDAQ. So you can see we trade up, have very nice closure right here and dump. But the reason why we traded this direction in the first place was because of our draw. So if we look down here, you could see our draw through these lows and these stacked lows. Now, what does that look like in terms of other delivery examples? Well, I could show you plenty right here. So right here, we're on the 4 hour time frame. We have higher time frame delivery, higher time frame delivery right here. And it just continues and continues. So what this allows us to do is have a continuous bias. And sure, there's times where we're gonna have to switch our bias. In this example, we're bullish. At some point, we're gonna turn bearish, but I'm gonna show you guys how to identify that. But first things first, what is our focus and why are we looking at this, right? Because we know what direction it's going. How are we gonna execute on this? Well, after we find our delivery, we have to find some kind of continuation and some kind of way that we could actually execute on this. So looking right here on our 4 hour, you can see we're delivering through these lows right here. This is giving us our bullish bias. Up here, we obviously have some highs that we could target. But looking on this 30-minute, which is still the higher time frame, this is by no means a lower time frame fair value gap. You could see we have this discounted FEG. We trade into it, clearly respect it. This is a clear valid area where we could catch a trade. On top of it, whenever we're trading the NASDAQ, we always want to be trading during New York AM session. So right here we have our delivery during that New York AM session. You can see we come down, clearly close inside of this fair value gap. And this is an amazing entry. You're going to see many times that during the New York AM session, we're actually going to trade into higher time frame fair value gaps. We're going to make higher time frame fair value gaps. If you look at Asia session, you look at London session, there's not a lot of opportunity right here. So let's go back to what we were looking at before, which was how are we using these higher time frame fair value gaps? What I just showed you was actually continuation. So looking back, right here we had our delivery fair value gap, which was the 1 hour, and then we had a 15-minute and another 15-minute. The 15-minute was used as an entry right here. Same way the 30-minute was used as an entry right here. Okay, so whenever we're looking for a trade, it doesn't matter, we're always looking for a higher time frame fair value gap, regardless if we had one previously. Okay, I could show you plenty of examples, but this is the best way to learn it. Now, what is our third way at looking at higher time frame fair value gaps? We're gonna have the inversion. And I'll show you guys exactly how this applies to the charts right now. But just a little quick example, we have this inversion right here, or initially it was a bullish fair value gap, right? We close beneath it. You can see through this candle right here. Let me mark it out for you guys. This one right here. Once we have that closure, what is that telling us? That's telling us that this leg is very weak. So these lows are very weak. They're likely to get hit because we have no signs of bullishness right here. Once we disrespect that fair value gap, it becomes an inversion, and it's basically a bearish fair value gap at this point. Okay, so sure enough, we trade through there. Because these lows are vulnerable at this point, we're likely going to trade through these lows too. So this is all things that give us context leading into our trades. But let me show you how this applied to this chart. Remember I showed you guys that we had this continuous trail of 4-hour fair value gaps. We're bullish, extremely bullish. Well, where does this end? This ends as soon as we start disrespecting those 4-hour fair value gaps. Right here, you could see we actually have an inversion. We close beneath it right here on this candle. And sure enough, we continue to respect, well, we're respecting the inversion, but we disrespected the bullish fair value gap, of course. And sure enough, what does that tell us? Once we disrespect this bullish fair value gap, creating this inversion, this is telling us that these lows are likely going to get ran. Like, it's a clear indication of where price is going. So if you could come into the market every day and have an idea on where you think price is going, then all power to you. Okay, so looking right here, I'm just gonna go into current price because why not? Okay, so we have some of these fair value gaps that have not been disrespected just yet. You see we're keying off of it. Right here, looks like we had an inversion. So what is likely to happen at this point? We're likely to run into these highs. I can't tell you exactly what will happen once we run to this high, or sorry, to this higher time frame fair value gap, because either we also create an inversion right here or it respects. And this is the beauty of fair value gaps. It could go either way. You just have to watch the closure. You just have to be patient. Trade during New York AM session and you're gonna catch a lot of these banger trades. Now, going into our final example, I'm going to find a trade for you guys. Of course, I don't want to leave you guys hanging. I want to show you guys what this is about, how we're gonna actually execute right here, right? Okay, so going onto this higher time frame, we're on the 15-minute. Right away, I spot this fair value gap. You could see that kind of trade up, clear respect at the high. Let's go on the 5-minute, see if we have some more fair value gaps in here. Sure enough, we have an inversion right here. Looks like we come above for a little bit, but this is still telling us where price is going. This is showing weakness, and because of that weakness, we're likely going to trade through all of these lows. And so what does that leave us with? Well, that leaves us with room to execute right here. It's New York AM session. We know where price is going at this point because we have this initial delivery. We have this inversion, and that's telling us that price is going to trade lower. And this is how we use the higher time frame. You continue to key off of these key areas. We're going to look at where price is respecting, where price is disrespecting. As I said, we're likely to run up to some of these highs and then potentially dump lower or potentially invert those and trade up higher. That's exactly what I do every day of the week, every single day. You guys see me live trading, and I'm absolutely killing it because I know where the direction is. I might not have the perfect entry, but you don't need to have the perfect entry where you know where price is going.
I hope you guys enjoyed the video. If you learned something, make sure you hit the like and subscribe button. Make sure you use code Chris on the Legacy Funded Futures platform. I will have that in the links below. You guys take care. I'll see you in the next one.